got a cool name, by the way. Solve?
Thanks. Yeah.
Is that your, like,
That's my name, yeah.
your maiden name? Your birth name?
That's my actual name, yeah.
That's cool. Mm-hmm. Yeah, I saw your name and was like, that just like kind of fits, you know, with the whole, I don't know. It feels like it fits with like cryptocurrency, like money stuff, which is cool.
I have a daughter named Theory.
Theory?
Yeah, so she's got to live with the same thing. You know, she's got to grow up in that same sort of environment where everybody's like, is that your name?
Right. Yeah. Did you pick that because your name was like that? Were you like, it was kind of a cool...
I don't know, I really struggled with baby names, you know. Mm-hmm. And, you know, I just wanted her to be able to live a life where, you know, and this is only my opinion, obviously, but she would be in a classroom and she would be the only one named that. So, like, you know, names are so common. Mm-hmm. I just wanted to give her the opportunity to not have to experience that. Right. It's just why that was important to me. I don't know, you know, I don't know if you've ever read the book Freakonomics. Mm-mm. There's actually a whole segment in that book about names and how they could work against you, you know. So I actually did something that could actually, you know, or it could inhibit her in some ways, you know, in life. The example used in that book was specifically about job applications and just like sending in your resume, and someone's going through all these resumes, you know, and like what a name says about that person, right? And so, you know, in that way, someone could say, oh, this is awesome. And I think like millennials, Gen Z, you know, people that are going to be in those roles in the future would love seeing a name like that, and it might intrigue them to make the phone call to set up an interview. Right. I think in yesteryear, it might have worked against her, but I think she's timed properly with a name like that.
No, I agree. It's a cool name. Mm-hmm. My name's Devon. Mm-hmm. I've only met like 2 people in my whole life that had the same name, and
that spelling.
I've only met one with the same spelling.
Oh, okay,
I mean, I've seen others, but in person, I've only ever met one with the same spelling. The other ones have been Devin.
Mm-hmm, totally.
So that was pretty cool. Like not having to have like a Josh or
right.
Which like nothing against those names. It's just really common. But so let's get back to before I got you water. How did you get into cryptocurrencies and blockchain and stuff like that?
Well, I want to preface the entire conversation by just saying that, you know, these are my opinions and certainly not advice, especially not financial advice. Yeah. And, you know, that's just, you know, what I say. And this is on a podcast. It's very much specifically for entertainment purposes only. Yep. And so, you know, I had a record label, back in, so kind of like, I'll even go further back than that and try to zoom quickly to the point where I discovered Bitcoin. But I went to school for audio engineering, and moved back, to New Mexico, and I had a record label, that I was trying to do as one of my first businesses. Mm-hmm. And I had this large collective of people that were working with me on the label. And, you know, we got to a point where it's like, okay, we need to have a website that like works where we can actually have e-commerce set up on. So we had like a splash page or something really basic. So at the same time, I was running a retail clothing store, really small urban hip hop clothing store in downtown Albuquerque. I was looking for, you know, to develop a site for that as well. And I found somebody that was, you know, a web developer, right? Mm-hmm. And they ended up coming to my house to start to build the website for the label. And they were just, you know, doing some other things online. And I was like really curious about it. And they said, you know, they asked me if I knew what the Silk Road was. And which is this, you know, I don't know if you know, but this radical like underground website back in the day on the dark web. So it uses a technology called Tor, which is the onion router. And if you utilize that technology, you can access these sites that aren't available on what you'd call like the open web. Right. And that was just absolutely fascinating to me. And so was the fact that you had to use this special currency on that site, right, which is called Bitcoin. So that became more fascinating, right? I'm like, wow, I didn't know that like there was some part of the internet that I didn't know existed.
Right.
But even more interesting is like, what the hell is this money that people are using on this site, right? Mm-hmm. And so that became my interest. And I just asked, more about it. And, it gave me my first Bitcoin, plural, which is like most people actually don't recognize that Bitcoin is the plural for Bitcoin. And so.
Is it really?
Totally. Yeah. So, it might be so misused to this point, that it's actually no longer true that it's the plural, because everybody just says Bitcoins all the time.
Yeah.
However, I find myself like, unable to use that terminology just because the plural to Bitcoins, you don't see it spelled that way with an S at the end in the white paper or any mention by Satoshi or anyone in the early days. So, I just understand that the plural is Bitcoin itself. So that's what I mean when I say that.
Yeah.
That was long-winded, but I guess it's just we all have these pet peeves that we see online
no,
or whatever,
absolutely.
and that's one of them.
Yeah. I think I just saw that someone said that and I didn't understand what they were saying. Mm-hmm. Because I was like, what are you even referring to? But now that makes sense.
Now it makes sense.
Yeah.
Yeah. So, you don't say I have some golds,
That's true.
And so, it's similar in that way. In any case, I just became fascinated by Bitcoin. I wanted to know more about it. And it was pretty confusing, to me at first. I was like, it's cool that it's here and accepted on the site, but like, what else is it, and how does it become, what I would say ignorantly back then was, well, how does it become money afterwards?
Right.
Not realizing that, hello, this is money. Mm-hmm. This is like the future of money. And this is the monetary infrastructure for tomorrow, which is today. Right.
Yeah, that's true.
And so, that's what I didn't understand at first. But eventually it just clicked more and more. Honestly, I took a long break, right? Like I had Bitcoin in 2011. I spent it. I didn't, I shared it with others and I didn't, think much about it actually until a friend, that I introduced to Bitcoin was visiting in town and told me about Ethereum. Mm-hmm. And so, I was like, that's fascinating. I've only seen a couple of other coins, but I haven't like really thought about it. I don't trade them or anything like that. So it was like, late 2014 into January 2015, I really started researching Ethereum. It was 76 cents at the time, and when I picked up my first Ether, and I just like wasn't doing anything with my Bitcoin, and so I put the majority of my Bitcoin in Ether. By using an exchange. I signed up for an account on exchange. So okay, what are all these charts? And this is really interesting, and really didn't know anything, but just like made my way to understand, market buys and limit buys. And like, I was not a stock trader or anything like that. So, I had to teach myself. And then, I just blindly market bought Ether with a few Bitcoin and then like a couple of weeks later, the price of Ether just exploded to like $7. And I was like, whoa, what is this? Yeah. I woke up one morning just like completely enamored and like, in shock. Mm-hmm. And, so that started it all. That rush started like, oh, what's happening and why is this valuable? And then the question of what is value stuck with me and like haunted me in some ways. Yeah.
Yeah, no, I find like Bitcoin and all the different coins and everything really interesting because like even the idea of money is just really strange.
Totally.
Because it's just like a value that like we give it. Mm-hmm. Like it's just a piece of paper or like you swipe your card and it just transfers. So it's been confusing for me to understand that transition to Bitcoin, mm-hmm. which I'm sure you had at the beginning too, where you were like not really understanding the value side of the currency maybe. Mm-hmm. Like I have Bitcoin right now because like a few months ago, I was doing some research into it, and I've just been like looking into stocks and all this kinds of stuff. I invested in Tesla a year ago.
Nice.
And have just been trying to figure out like where to store money that isn't going to lose the value of it.
Totally.
So, but it still just doesn't make sense to me. Like, I don't see right now how this transitions into like the currency of the future. Like, obviously there's a path for it. Tesla just opened up, like you can buy a car with it now, which is crazy to me. But like, I don't see, because it's such like I see it more as like a hold asset rather than like, I don't see myself spending it. So I don't know when we get to the point where you're like, okay, now let's start trading this stuff.
Totally.
Because it just seems like it's too valuable, at least right now.
Yeah, I've thought about this a ton, and I've also thought about the best way to kind of explain this. And I really have not found that perfect analogy yet, but essentially it's this. So maybe one of your listeners can chime in and say, that sounds exactly like this,
Right.
But, Bitcoin essentially is rolling along, and we are investing in it, but we don't really feel like spending it, right? Because it rapidly appreciates against the dollar, typically over time. And so, I mean, not even typically, always over time thus far, right? And so that's all the data we have is Bitcoin only goes up. And you might say, well, I heard about Bitcoin in 2017 and went down a lot. Well, sure, you heard about it at the very top of essentially a bubble in the market. But go back, from when Bitcoin was fractions of a penny, and like that sort of experience, and all the way to, today, even every single market cycle, sure, there's a dip, but never back to the previous all-time high before it.
Right.
And so we've only ever gone up, really, if you have a whole time horizon of, more than 2 years. And so certainly when you look at it that way, you don't really want to spend it. I totally understand that. So essentially what I was getting at is Bitcoin's rolling along. We're like investing in it. And it is what we call Bitcoin. 100 million Satoshis is what a Bitcoin breaks down to. So it's divisible to the 100 millionth, right? And so Bitcoin rolls along until we don't talk about Bitcoin the way that we talk about Bitcoin anymore. And we start talking about sats or Satoshis. So, how much does something cost in the future? A few sats or whatever amount of sats, and not 0.00001 Bitcoin for this appliance or whatever. We're talking about it in sats. And so it's really just rolling along. Once we do get to the time where we're talking about it in sats, then you're going to see that widespread use. I mean, you already see widespread use, but the difference between today's use and that use is essentially you've been able to buy anything in the world with Bitcoin for a long time, ever since these Visa cards started rolling out. What's essentially happening obviously is someone has a Bitcoin account. It's tied to a Visa card, and you spend the money on that card at the shop or at wherever you are. And it's a debit against your Bitcoin account, which is liquidated at a market rate right then and there and transferred to US dollars to the merchant. And so you can buy anything with Bitcoin if you're doing it that way. Obviously, you can also do that now with, sending Bitcoin to somebody and waiting for the proper amount of confirmations to feel confident.
Right.
Or also spending or utilizing the Lightning Network or another layer 2 solution that sits on top of Bitcoin that allows for instant transactions or any other cryptocurrency for that matter. So, we can spend it now. And I think once we start talking about it in sats, the way we do dollars, then, you'll see widespread use, obviously, or at least the understanding of how it's mainstream.
So sats is just like the divisible part of Bitcoin. And that's why there's so many digits after.
That's correct. Yeah. Because, you have 100 million sats.
Yeah.
That's what we call a Bitcoin. Actually, like this analogy that my daughter is basically yelled at me over because I was like, check this out. And I explained this to her and she's like, no, you're wrong. And I was like, I swear. And so, many will probably consider this wrong, but I find it fascinating. The fact that, to me, the Satoshi to Bitcoin is similar to photography to video. So I was like, there's no such thing as Bitcoin. Actually, there's only Satoshis. And what we call Bitcoin is only simply a collection of 100 million Satoshis.
Right.
And so the analogy was that there's no such thing as video.
Yeah.
There is only photography in sequence.
Yeah, there's just photo sequences.
Exactly.
Yeah.
And so when you think about it that way, Bitcoin's the same way. We just call it something once we see it collected.
That's really interesting. I never thought of even video in that way, really. I mean, I have a little bit because I've played around with video for a long time, but I've never thought of it in that direct way. Some
videographer right now is like, you're an idiot because it's not the same, you know, and they're right, I'm sure, in some ways, but to me, it makes a lot of sense.
No, I think that you're completely on it because even from the beginning, it was just different frames that you had to make and process. And even today, I am a videographer. I do videography work as well. And that's exactly what it is. You're just working, if you want to get slow motion, you need 120 or more of those frames, or 60 or more of those frames to get slow motion.
Right.
And if you want a cinematic, you do 24 frames.
And you can imagine being in an old cinema where you're hearing the click, 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 and the different frames going by in the projector. And the totality of those frames is the movie.
Yep.
And so the totality of 100 million Satoshis is the Bitcoin, right?
So right now, the market cap for Bitcoin just went over
1 trillion.
1 trillion for the first time ever. And I think it dipped back below it right now. But
we don't talk about that. I'm just kidding. I know all my friends are texting me all these hilarious things like Bitcoin and Trill, like Netflix and Chill.
Oh yeah.
All this stuff. It's it's getting pretty silly.
Yeah. I've been seeing some stuff about the volatility of it, new investors into it. It's just recently, I think, become so easily accessible. With all the apps and everything, like Coinbase and Gemini and those different types of apps, I suppose, make it easier to access.
Yeah.
I mean, back in 2011, I'm sure it was really difficult to access.
Oh my God. Oh, yeah. You have no idea.
Yeah. And then if you had a long password, if you forgot it or lost it, no access.
Yes, in some ways.
I mean, I just saw some stories because the Bitcoin prices started shooting up that there are people that have $200 million in Bitcoin that they can't access.
That's true.
Which is I would have rather not invested.
Well, there's always the chance that you figure it out, right?
I suppose.
You find your seed phrase.
Yeah.
What that long string of numbers is called a private key, right? And really, a hash of a private key would be a mnemonic seed phrase, which is 12 or 24 words in most cases. And when you have those words, it can be kind of reversed in a way. I'm putting this real layman's terms to your private key, which gives you access. And really, what that access is actually the ability to spend. And that's it. And so there's a public key, private key pairing, which makes up any wallet, right? And you can actually have many, many public keys, right? And one private key to access, them. And so, if you lose that private key or you didn't write down the seed phrase, then you're not going to be able to access or spend that coin. Of course, you can know the public key and view the amount of Bitcoin that's in that wallet, but there's no way to spin them. And so, Bitcoin comes with a responsibility to be your own bank, and you must be responsible for the security or the OPSEC, the operational security, to manage your own Bitcoin, which is why custodial solutions are so popular, like Coinbase.
What do you think of those? Because there's tons of apps now that let you do it. But I've seen there's a lot of different, it's not as, I guess it's like other apps where there's better ones than others.
Sure.
I mean, Elon Musk just tweeted at someone, they're like, your app sucks. And it was a free wallet or something that. And
I actually read that. That was hilarious. Wow.
And I was like, I don't why is this wallet so much worse than others. And then,
well, he explained it right under that tweet.
I did. Yeah. I saw that. Like it's not yours.
So
right?
The saying in Bitcoin is not your keys, not your Bitcoin. Because if you don't have your own private keys, meaning you're using a custodial solution, then you don't really own that Bitcoin. You own an IOU for that Bitcoin, right? And so that's exactly what Coinbase is. Now, Brian Armstrong from Coinbase would argue, against the point that, and say, your Bitcoin is your Bitcoin no matter what and all this. But the fact of the matter is, you can't move it without, asking Coinbase to do so. And if something happened, with Coinbase, which I'm not suggesting something would,
right.
I think they're extremely secure. But essentially if something happened, it's not your Bitcoin unless you actually have access to it via private keys.
How does one get access like without like a Coinbase or a Gemini wallet or whatever?
That's a good question. So what we kind of call those solutions are on-ramps. So fiat on-ramps, meaning you have a bank account, you have some US dollars, and you want to buy Bitcoin. Well, you would sign up for a custodial account like that and utilize it as a fiat on-ramp and purchase Bitcoin. That could be the way that you purchase Bitcoin. Certainly the way that I have purchased Bitcoin, most of the time. And there are also other services, that are communities online where you can meet up with people in person and purchase Bitcoin, or you get some sent to you from a friend. But I think to get to, to really dive into the question, is you're talking about cold storage solutions and hardware wallets, which are essentially one and the same. Except for a cold storage solution could also be just a paper wallet. And so these are creating a wallet offline. It generates a public and private key pair. You take the public key and you send Bitcoin to it from somewhere else. Now that Bitcoin lands in this address, and you have the private key, which is essentially this piece of hardware, i.e. Trezor, Ledger, Keep Key, something like that. And what these hardware devices are doing is actually holding your private keys. So when you want to send Bitcoin from that address, you load it up on your computer and you plug in the hardware wallet that acts as the private key that signs the transaction and allows it to take place. Without that key or that hardware wallet, it doesn't happen. However, you could light that key on fire and your Bitcoin is still safe. Granted, you wrote down the seed phrase or have a backup of the private key.
Wow. That's really intensive.
Right. So hence custodial solutions like Coinbase.
Make it much easier.
For most, yes.
For me. I would never.
For almost anyone. Yeah.
I would never do that.
Yeah.
I mean, I don't know. I think most people you would have to there would have to be one person that that had done that for you to even think about doing it.
Well, maybe. I mean, the more you get into, or head down the rabbit hole, as we say, in Bitcoin, then the more you get curious about security, the more you get curious about the whole point of Bitcoin in the first place.
Right.
And the more you become interested in cold storage solutions. Like right now, where you'd want to generally hold cold storage, there's a really intriguing thing happening in custodial solutions where many of them are paying a yield.
Yeah, I'm part of that.
Annual yield on your holdings, on your crypto holdings. And this isn't just Bitcoin, it's on several cryptos, including stable coins.
Yeah.
And we'll get to stable coins later, I guess. But essentially, crypto's backed by a basket or a certain amount of US dollars or some other fiat currency in a bank account that's audited in most cases. The audited part. In any case, it's intriguing because you're like, do I leave my crypto or my Bitcoin in this case in cold storage, or do I move it over to one of these solutions and earn 6.5%, paid out in the native asset of the chain, which in this case is Bitcoin.
Yeah.
So, that becomes really, really interesting. Most of these companies that are offering yield utilize a company like BitGo or Bitcoin Swiss or something that is a kind of what we like. You could kind of think of it as Fort Knox, like some sort of crypto solution that's air gapped and literally like in a cave, where it's like these things are offline and highly secure, right? And they have what's called a hot wallet. So that acts as, okay, someone wants to move Bitcoin out of or utilize it in an exchange or something where the majority or bulk of crypto is held in cold storage, like in a secured vault, so to speak. And the hot wallet allows for certain transactions of a certain volume. But if you want to withdraw, you're really like utilizing the vault, which can take some time, right?
Right.
And so those are really high security options. Of course, you can do the same thing at your house with a paper wallet or writing down the seed phrase and stashing it in various areas or something,
right.
And granted, you could put those things together in sequence, those words. You have access to your Bitcoin no matter what, even if you lit your cold wallet solution on fire.
That's crazy. That's a lot to try and, I don't know, just thinking about that because like the way that we operate with money now is so like it's frictionless.
Right.
Like there's nothing, there's no problems.
Yeah.
You just like I can transfer money from my savings account to my checking account in 10 seconds through my wallet. So trying to think of having to store these codes in various places so that no one can access it and then having to do that seems like a lot of trouble.
And I'll agree with you that the vast majority of people won't do it that way.
Yeah.
But more and more they will, right? So as we move along and people get more into Bitcoin, there will be some amount that many people will be interested in holding in cold storage long term.
Yeah.
Or utilizing a service like Casa, which is by several people, one of which is Jameson Lopp. Check him out at lopp.net. That's LOPP.net. Incredibly intelligent, very interested in OPSEC and, old school Bitcoiner, early. And, I think has been a huge net positive to the space. And they have this multi-signature solution. So many people might do this for long-term, like family wealth storage, which is utilize a service like Casa. And they are one signature. Let's say you have 3 signatures in a multi-sig, and they are one signature. You're one signature, and your significant other is another signature, right? So if something happens to one of you, 2 signatures is all it takes to make a transaction happen. So you and your significant other could make the transaction happen, or if one of you, suddenly passed, or didn't have access, the significant other could work with the custodial, or not the custodial, but the other multi-sig in this case to sign a transaction to move Bitcoin around. Otherwise, it's long-term storage. So that's a really safe solution. But obviously for now, the vast majority of people are going to use a custodial solution like Coinbase, like Voyager, any of these, exchanges or apps. Although I don't really recommend you leave a lot of cryptocurrency on exchanges, just because, they can be exploited.
Right. Do you use like the earn part of those wallets? I mean, where you just store them and then they earn you interest on them?
Definitely. Yeah. I mean, especially with other cryptos, right? So, a few years back, I had a proof of stake company, which is like, what is that? But essentially where we created a corporation and we wanted to offer exposure to cryptocurrencies for average investors by just, being able to buy our common stock, but what our assets as a company was 100% crypto. And so, these cryptos were, essentially held in a node, a computer or a wallet connected to the network that, because we were staking a certain amount of cryptos, allowed us to further stabilize or support the network that they were on. So sometimes making decisions on that network with voting power, and sometimes just helping to verify transactions and the legitimacy of the network itself by utilizing a consensus mechanism called proof of stake. So we're kind of jumping now, but essentially Bitcoin operates on a consensus mechanism called proof of work, which utilizes what we call mining rigs. So compute power to legitimize the transactions taking place in the network by proving that they solved a challenging algorithmic puzzle to solve a block. So where you get block and blockchain.
Right. That's interesting.
Yeah, I'm thinking like we could go down any of these different holes.
Yeah, there's
rabbit holes.
So much on any of these. But I'd like to talk about blockchain a little bit because I think blockchain is really interesting. And there's been a lot of talk about, I mean, I don't know that much about blockchain. Honestly, I just know that it's like a ledger and there's like no way of really breaking it and making it falsified because it's backed up on so many different computers and they talk to each other, essentially. And if one tries to get cheated, the other ones are like, well, that's not right. So they just go back to the other path.
You can have a consulting firm now. You got this down.
But yeah, I've seen companies are like moving towards using that, but I don't understand how, like for what. Yeah.
I mean, you and many others, I saw someone yelling on the other day, on LinkedIn about, what happened to all this blockchain hype? I thought people were going to use it. No one's using it. And I was like, okay. It's like the vast majority of the Fortune 500 companies are all utilizing blockchain by now.
Are they really?
Totally. Yeah. Okay. And so they all have blockchain departments. They're all utilizing blockchain, and some are much further along than others, but certainly enterprise use is exploding.
Yeah.
And, so is, supply chain management. Supply chain management is the most obvious use case for blockchain outside of financial infrastructure, which is to say, if you need a product moved along a supply chain and you need it checked in, and maybe you need really important data about that product, right? What temperature it's at and where it is exactly when, which is super valuable to any sort of supply chain management. And blockchain allows that to take place in a very secure and very fact of the matter way. So instead of utilizing like a central database, which you could, lose power at or could be altered by one party, right? This allows for a distributed network that maybe all the different organizations that are utilizing that same supply chain or relying on it in some way have the same data at the same time and the same copy of everything that's ever happened. So if there is an issue like something being whacked out in temperature inside the supply chain, which could lead to serious health complications for the consumers of that product, well, it's known right then and there, and it's permanent, and you can't change it. And so a lot of people have a trustless network that they can rely on. So supply chain management is big. And that's just scratching the surface of supply chain management. It's also just like the ability to automate the entire thing. Blockchain aids in that as well, very well.
That makes a lot of sense. It makes it like anti-fraud. Kind of like you couldn't, like there's all sorts of stories about like just like food producers, I suppose. We were talking about that area, and they're making something and it's messed up and they know it's wrong, but they just say that it's not, and then it ends up hurting a lot of people. Something like blockchain wouldn't allow for that manipulation.
Certainly, unless, it's a private blockchain and it's at least it would be immutable in some ways. There are ways around that where they could still be fraudulent, but the more distributed the network is, it becomes very unlikely that they would be able to do such a thing. But if a single company was running a blockchain, well, there's a thing called forks. And so if they wanted to rewrite the blockchain, they could certainly do so. That's the whole point of it being distributed, because they would have to collude all together, all parties on the network, in order to change the network, right? Or change the data on it, or the history, let's say. And so that's the beauty of having a distributed network with all the different parties on the supply chain. Because if there's one bad actor, the rest of them are going to be able to call them out.
Right.
Plus, if you have a public blockchain, you're able to actually see, oh, there was an issue. Everybody knows it. Let's, there's no capability for fraud at that point, right?
How does one, like, because from my understanding, it's visible to the public. Like the Bitcoin blockchain is just visible to anybody.
Yeah.
How do you even visit the blockchain?
Yeah. So public and permissionless blockchains you're able to view them, right, by utilizing block explorers. I mean, that's almost similar to like an explorer on your Windows computer or something, right. Just like seeing all the different things on the computer. So you can view a blockchain, and every single transaction that's ever taken place, you can follow and route and know and determine and, discover things about all the way back to the very first block. So that history remains.
So essentially you could see, like, if say someone had like owned like a serious amount of Bitcoin, you would be able to trace back and see that there's someone that owns.
Yeah, you can see how it got into that address. If it was mined, yes, all this is possible to view. And if any of that moves, the moment it moves, you can get triggers notifying you of such a move, which is, you could find on Twitter if you just looked up whale alerts. Like there's so many accounts that scan for that sort of thing, that, have these blockchain public addresses inputted into into their software. Yeah. And if anything ever moves from them, or it sends or receives, it gets a notification.
What would you use that notification to know, like, whether you wanted to buy or to sell or to, Oh,
sure. So, and many do, right? So, early wallet from, 2010, moves, 100 Bitcoin, hasn't moved in, more than 10 years. Like,
jeez.
What's up with that? Where did that Bitcoin go? And so it would probably say to unknown wallet, but if it said to this wallet and it has a little label there, Binance 11 or something.
Yeah.
Well, that 100 Bitcoin from really early just went to a known exchange. What do you think that Bitcoin's going to do?
It's going to get sold to other people.
It's going to get sold. So, that might cause a short-term dip with people, worried. What does this mean? Did Satoshi just move his coins and is he selling his Bitcoin or something like that? Yeah. And so you can imagine in the public eye, this sort of like miniature frenzy takes place. And what I just mentioned is not common by any means, but it's happened. Yeah. A few times where an early wallet holding, a larger amount of Bitcoin has moved a significant amount of Bitcoin to an exchange. It's happened before.
Yeah. And it happens in all other areas, like in investors, like
totally.
There's giant Tesla investors that when they move, they obviously it's a little different because most of those people probably that have those giant Bitcoin wallets are like individuals, most likely, not like big people. Like
we don't know.
That's true. Yeah. But like these other ones are like known. They're like, this is ARK Invest and they have this stake but they're selling this much of their stake. Maybe it's just a rebalancing thing, but everyone freaks out because so it's like the same sort of thing. It happens in all areas.
You made a wonderful point. The rebalancing thing, that's certainly something that can be taking place at all time and is. I think the difference between the first scenario and then the ARK Invest scenario would be, one's a really early wallet. So like people speculate on who that is and why would they be selling, that sort of thing. And so with someone like ARK Invest, their transactions are fairly new, so I think changes things.
So Satoshi is everyone speculates that he's the creator. Is that who they speculate is the creator? Because no one knows for sure, right?
Well, what we do know as a fact is Satoshi Nakamoto is the creator of Bitcoin, right? What we don't know is who, what, how, Satoshi is, and, if they're a group of people, if they're a male or female, if they are an entire government, like we have no idea. And so, I've always speculated that it was a single person that, or maybe like 3 people that are, specifically a few people that had been working on similar sorts of things before Bitcoin was created. And it's funny, the timing of this podcast is so interesting because essentially this morning I learned about an anonymous account on Twitter that essentially was all the posts are by a bot, or what seems to be just a bot posting, kind of scraping the internet, and then finding a certain word, in this case gold, and then tweeting about it. And it's speculated as of this morning, or at least I learned of it this morning, that this is an anonymous account of Satoshi Nakamoto. And the reason why this is because in January of 2009, the first tweet about Bitcoin was from Hal Finney, who was very likely part of Satoshi Nakamoto, if it was a collective, because he was the first person ever to receive Bitcoin, right? And in January, I think it was like January 10th or something of 2009, he tweeted, running Bitcoin. And so, he had a node up, he had received Bitcoin, he was, running Bitcoin. He was part of the system. And the second tweet about Bitcoin, which I don't know how, I didn't know this before and how it's not talked about widely, was from this account.
The bot account.
Yeah.
Or central bot account.
Totally. Which says, this account is like tweeting about gold,
Right.
And this account says, something along the lines of Bitcoin, a completely decentralized, distributed system, right, with no third party, and then, may or may not have mentioned double spend in that particular tweet, but very fascinating to see a tweet like that, second tweet about Bitcoin on Twitter, as far as I can find or know, ever. And that just happened this morning. So this is really interesting timing.
That is wild.
Yeah.
And it just continues to tweet about gold?
No, I don't think it's tweeted in some time, but it's interesting to see this just like random, account that's anonymous that was just like basically ran by a bot. And then, but it was the second tweet about Bitcoin ever. It's like, how did that happen?
That's really strange.
Yeah.
And so,
and for any treasure hunters out there, one of the tweets after that was something about if you know where oranges are in the sky in Winter Garden, Florida, a treasure is to be found. And so that has a lot of people, I think, flocking to Florida right now.
When was that? Was that on the same account?
Yeah, same account, just a little while later.
Oh, man.
I know, it's fascinating.
And that was like a long time ago, though, huh? That tweet?
That tweet's a long time ago, yeah.
Oh, jeez.
But, that doesn't mean it was found or anything.
Right. So this Satoshi Nakamoto, right? That's his name, right? Or its name?
Yeah.
They created like this decentralized currency, and no one knows who they are. Mm-hmm. He, she, it. Mm-hmm. But it's like, it was like the first of its kind. Like there's only a set number of Bitcoins.
That's true.
In existence. And there's still some that haven't been mined yet, right?
That's correct.
There's like 18 million currently.
21 million total. In total, there's 21 million. It's actually a fraction, off of that. But in any case, for simplicity, 21 million Bitcoin in the code, and they're mined. And the final, every 4 years approximately, the halving takes place, which is the block reward. So in a blockchain, each block, so roughly every 10 minutes in Bitcoin's blockchain, once the puzzle is solved by the miners, all the transactions in that block are legitimized, and the block attaches a new block attaches itself, right? The miner attaches a new block to the chain. In that block is what's called a coinbase reward or a miner's reward, right? And so that's where Coinbase, the company, gets its name from,
what I figured.
Right? So in the Coinbase transaction of the next block, a certain amount of Bitcoin, so the block reward within this halving, is sent to the miner, right? And that's why they're mining in the first place and exerting all of this compute power and electricity cost to stand up the network and to verify the transactions in the blocks in order for this incentive, which is the Coinbase transaction of any block, which is a block reward. And so they get paid in Bitcoin. I think you can't actually spend that Bitcoin for 100 blocks. But in any case, they get paid.
Is that for legitimacy reasons?
I guess it's just so you can't automatically do things to help with the fact that we need a few confirmations.
Yeah.
Because what could happen in any case, and does actually pretty often, is a split or a soft fork. And so the chain will fork if two different nodes are solved right around the same time, and they are different transactions because the miners are compiling these transactions according to the transaction fees. Yeah. So making for lucrative blocks, which is another incentive program. If two blocks are essentially done right at the same time, the blockchain can actually split. And then miners will start mining on the chain that they think is correct, right? Oh. And the chain that is correct is the longest chain.
Right.
And so eventually the majority of the miners, the chain that they're mining is the correct chain.
They make it so.
And it's automatically happens. It's not like doesn't necessarily take any sort of human interaction to make a chain do this. Oh, okay. And so this is just a natural progression. So if a chain splits, it's not the intention of miners. They don't want the chain to split. But if it happens, well, some of the transactions that took place in this shorter chain are essentially null. And so if those chains are usually figured out in 1 to 2 blocks, right? And so what we'd like to do when we receive a Bitcoin transaction is to say, wait 3 blocks for 3 confirmations, right? Which is essentially about 30 minutes on the Bitcoin blockchain. Once that takes place, you can be sure that you can at least know that it takes a significant amount of effort to reverse those transactions. So significant that you can essentially say it's impossible. And so that's why you wait for some confirmations on chain, which we can dive into later, and how it's used as money if you need to wait 30 minutes and all that sort of stuff. There is solutions to that.
Right. Yeah. I was just thinking about that. That makes it kind of difficult to just go buy something. You'd have to wait around. Oh man, I just don't. Yeah. It's so, I'm not a coder. I don't understand any of that, obviously. I tried to and I'd love to learn how to code, but it just takes so much time.
Totally.
To get into that sort of stuff.
And then, exponentially more time to master.
Oh, absolutely. Yeah. I think it's such a cool, I took a coding class in high school, so I know the very, very basics of HTML, just to make a website. Mm-hmm. And it was super fun. But then I started diving down rabbit holes, and I was like, this gets so complex so quickly that I have no idea.
Totally.
I don't understand. It just doesn't make sense to me how people can get to a point where they create something that's so complex that essentially it's built so that no one can break it. Mm-hmm. Even the creators.
Totally.
And that just makes no sense to me.
Well, it's really the only way to pull this thing off.
Right. Because it's without a governing body, it has to be untouchable. Mm-hmm. So that it's really just all of the people make up what the value is rather than a centralized power.
You nailed it. That's the whole reason it's valuable, is Bitcoin is a network with a monetary unit that and the entire network is owned by its participants in this case. So, everyone that uses Bitcoin is the owners of the network. And so when all you have is owners, you can't just change things and make them your way. You have a lot of partners to discuss it with, and everybody has to agree, or the majority has to agree to make it run properly. Right. Yeah. And there's actually, and everyone's incentivized to make it run properly, so it's completely like, incentivized structure. It's insanely brilliant, totally distributed, completely decentralized, owned by everyone and no one at the same time. And, even Satoshi being an anonymous character, this allows for us to not have anyone to take down or pinpoint or talk to or figure out. And instead, you just have all these different entities that are distributed around the world and under, all sorts of other governments, right? Mm-hmm. And different governments have different ideas on how and what this thing is. But we can't go in there and, change everyone's mind to like take it over. So it's completely an impenetrable network. You can't shut it down. There's nothing to shut down. You could shut down every node one at a time. You'd literally have to shut down every node in the world in this distributed system in order to get it to stop. And anyone can run a node. So,
it would be impossible.
Yeah, it's not possible.
Because it would just continue creating nodes.
Right. And even like the only way to really destroy this thing, or at least its use, besides like some sort of complete monetary failure, or massive change in Bitcoin itself, which is extraordinarily unlikely, would be to get rid of the internet.
Yeah.
And even if you got rid of the internet, you could still use Bitcoin in some way. So the transactions just wouldn't be, on chain yet.
You would just have to have, you'd still have to have computing power.
Essentially, if the internet went down for a really long time, Bitcoin would still be there when the internet came back up.
Right.
And that's important.
That's crazy. Mm-hmm. How would Bitcoin change? You said that like it's very unlikely, but mm-hmm. What do you mean by like?
Well, I mean, we can speculate here. If Satoshi Nakamoto became known, or Satoshi's wallet sent their, started moving their coins around. If Satoshi started moving coins from the original, Satoshi's wallet or Satoshi's wallets and like cashing those out or something like that and doxing themselves, or, it would be pretty detrimental to Bitcoin. However, it wouldn't necessarily destroy it or anything like that. It would still be around. So, but yeah. I think that lots of the participants in the network would maybe not feel as inclined to continue on. But in any case, that's extraordinarily unlikely.
Yeah.
We've never seen a single coin move from any of those wallets or that wallet.
There's a single wallet that everyone speculates is his?
Well, that we know is for sure.
Oh, right? Really?
The original.
How many are there in there?
I forgot. It's like 1 million.
1 million coins?
Yeah. More than 1 million, I think.
Holy shit.
Yeah. Yeah. So, which is fascinating because we were talking about 21 million earlier, right? Mm-hmm. The total amount of Bitcoin ever be mined. And
so he owns.
This is pretty fascinating. So first off, we'll never see 21 million Bitcoin.
No, right?
Because many of them have been lost, right? So, the ways that you lose coins is like you were just talking about earlier, when someone didn't back up their private key and now they have like whatever amount of Bitcoin and they can't access it. Well, Bitcoin will be continuously coming out on each new block, right? And I was talking about halving events. So those happen about every 4 years. So every 4 years, the amount of reward that the miners receive in Bitcoin gets cut in half, right? So we have a known stock to flow ratio for the chain for Bitcoin. And we know that around the year 2140, the final Bitcoin will be mined.
Because after that, it just won't be.
After that, the chain runs on the incentivized structure built into it with transaction fees. Before that, It runs on transactions fees plus the block reward. And so the block reward, cuts in half over and over and over again until you're literally left with the little minuscule amount of Bitcoin per block.
Right. So it's just not worth it at that point.
Well, sure it is, because you're not taking into consideration the value of Bitcoin at the time.
Oh, shit. I didn't even think about that. So, oh my gosh. So this was all programmed in.
Yes. And so
How can someone have that foresight?
That was the analogy I was trying to create earlier, where Bitcoin is this thing that rolls along and then finally blossoms, and everybody's just using Satoshis. And we don't we're not talking about Bitcoin in the same way. The main kind of verbiage is Satoshis, right? And so it builds up and keeps creating and consuming fiat money and developing into the most valuable asset ever known to man, and essentially unrolls into all these little parts, which is 21 quadrillion or whatever, and allows people to use those parts, the Satoshis or sats.
That's so hard for me to even. That's the group or set of people or person who created that had more foresight than anyone. Right,
which is, I think it's actually from experience, right? There was always eCash, digital gold, and these things that were people tried, right? So Nick Szabo, someone to look up, Hal Finney, and there's actually several others, and they had built these ways to kind of do something like Bitcoin, but no one could get around the double spend issue until blockchain was created. So blockchain was a subsequent technology to allow Bitcoin to exist. So Satoshi had to create blockchain to create Bitcoin,
Right.
So, the people that are screaming Bitcoin or blockchain, not Bitcoin, it's pretty silly because, Bitcoin is the proven blockchain use case so far, you know what I mean?
So with all the other coins, I mean, there's Ethereum, there's Dogecoin, there's all these, Dogecoin's like a meme coin at this point. I don't even, there's so many coins. Does that just keep going? Do we keep getting new coins? Is everyone going to have to be able to spend and receive all of coins, or are you just going to have a wallet full of tons of different coins? I guess that's kind of like a penny or a quarter, if you were trying to compare it to a fiat thing, but, why, where does it end? Do we just end up, are there a group that win out, and prove their value, or does it just keep going this way?
Yeah. The short answer is we don't know. Right. And the other answer is, first I compared these different coins in your wallet to kind of different monies around or currencies around the world, as opposed to a penny and a quarter. So that is to say that, they have use cases inside of their own environment. So you might have a coin that works in a certain video game. When you remove it out of that video game, you could convert it to some other coin that works inside of a different environment. And these things can maintain exchange rates through automated money markets and all these other mechanisms. There's things called atomic swaps. In any case, to not make it too difficult, is just that there can be coins for all sorts of different reasons, or tokens for all sorts of different reasons, and you can exchange in and out of these things, sometimes very, very easily. And I think going forward in the future, that's kind of what it's like. You might show up to purchase coffee at a local shop, and you might spend Devon coin, but the merchant doesn't know that you spent Devon coin, or even if they did know, they don't care because they're receiving the equivalent value of the coin that they accept, right? And so this is kind of the liquid way that this thing could work, right? So I think that's kind of the end goal. So anyone can have a token or currency or coin, or NFT, a non-fungible token, to exchange value with anyone at any time in the future. So yes, wallets will have many different coins in them. And then really to not make it too expensive for the listeners, I would say that some coins will certainly win out over others. And as a matter of fact, over the years, we've certainly seen, I'd probably say 95+% of all cryptocurrencies kind of go off into obscurity, which you'll never hear about again.
That's really interesting. It would make it so easy to go anywhere. Like you would never have to worry about exchanges.
Yeah. If you want to short some stuff, short banks, short exchanges, these things are not going to be around forever.
Right. Oh, that kind of leads into, did you get in on the GME and all of the Wallstreetbets sort of stuff? Were you paying attention to that, a part of it?
Certainly. I mean, I'm a market participant. So, as I see, volatility, it attracts me. And if I see unusual behavior, that attracts me as well. With GME, I simply watched. I sat on my hands and said, let me watch how this plays out. And when I understood what was going to happen, or at least in my opinion, I participated in AMC and started participating in some of the other ones.
Bed Bath & Beyond.
Nokia, the list goes on.
Yeah.
And I find it fascinating. I also, in many cases, and again, this is all my opinion, I see through the nonsense as well. So many of these participants that are part of, Wallstreetbets are going to end up wrecked, as I would say, and have already, many have, and many are going to make out like bandits. So it depends on what side of the market, how your timing is. Everybody should really pay attention. I mean, if your first introduction to trading is getting in on one of these plays, you are asking for trouble.
Oh, yeah.
And so if you know what you're doing, some of these plays are, very lucrative. And so, I'll just leave it at that. But yeah, it was fun to watch. I think overall, their intention is super interesting. Hey, this stock is ridiculously shorted. It's shorted so much that they actually have a larger short position than equity of the company even exists.
Wow, how is that even possible?
Well, we've made it possible. How is it legal is the question. Right. And so, I love the intention of Wallstreetbets in this case to do this. But at the same time, when you are going against a hedge fund with massive shorts out to prove a point, know that all the many other market participants are going to come in on the other side of that trade. They're going to make money on the way up when they notice what you're doing. And then they're going to pile in new shorts on the very top. Yeah. And they're going to make the money on the way down too. And so really, you think you're hurting venture capital funds? You're not. You're making them additional money.
They know how to read the market.
Totally. And they know, you just pump this thing, whatever hundreds of a percent, like obviously we're going to short this thing with margin.
Right.
And so.
And for a company that obviously doesn't have that value.
Right.
Like totally. All of those companies are on their way out.
Yeah. And also what's ridiculous is, things like Robinhood stopping people from trading, I mean, it makes sense to.
Do you think that it was actually a liquidity problem?
I mean, so if you understand Robinhood's business model, which I won't say I'm an expert in or anything, but I will say that they utilize some of these funds to allow them to function in the market. And so what this does is they can do things like front running your trades. And so if a large percent of people start putting a certain trade on, let's say, long GME in this example. Well, these other organizations that work with Robinhood can literally high frequency trade with you or against you at any moment. And they get seniority or they get favored because they allow for this company to operate its business model. So we won't dive like extremely deep into that.
Interesting.
Yeah, it's radically interesting. It's also terrible. Like I don't like Robinhood's business model. I also don't like the way that they make money against the average retail investor. It's pretty sad. It is cool that they made investing in equities specifically so easy for people.
I mean, I use it.
It's a great launch pad to like understand what's going on here.
Right.
However, most users just need to do more homework, right?
Yeah.
And kind of like get into other, brokerages, I think. And
What
figure it out.
brokerages?
Well, I mean,
obviously.
Yeah. We can talk about all sorts of stuff like with, just financial automation and, things that you should do kind of to protect your wealth and build wealth and generate wealth in the first place. I think one of the most important things, this isn't exactly the answer to the question, but one of the most important things I've learned is own hard assets and borrow against them. That is the way to generate wealth. And obviously there's all of these like side Lego parts that connect to that allow you to generate wealth as well and have additional streams of income. But owning hard assets and borrowing against them is a tried and true method.
So you believe in debt?
I believe in cheap money, and utilizing debt intelligently. Right. Absolutely. Okay. I don't believe in blindly carrying debt month to month and being, what you'd call a debt slave. Yeah. I certainly don't believe in that. But, there's many cases where we've seen debt be used in intelligent ways to generate additional wealth, know. So, really simple example. You utilize, some part of a bank loan to purchase a home. Mm-hmm. You fix the house up, you flip the house, pay the debt off, you keep the profit. You just profited by utilizing debt. So, that's just a really, really basic example.
Yeah. I've seen an example where you may have kind of just said that, but it's like a method where you can continue gaining more assets through that. So you buy one, you use part of the loan to buy the house, and then you use the other part to fix it up. You refinance it. You take that and buy another property, do the same thing.
There you go. You're rolling.
Yeah. It's like the Baird method or whatever.
So, we can discuss some of the ways you can do that in crypto, but to answer your question about brokerages, Schwab has a great brokerage setup and you can automate many different things with those types of accounts. If you want to have more of a trading interface, go with something like TD Ameritrade. I think one and the same organization at this point. And then, but it doesn't really like stop there for sure. Right. E-Trade, all these sorts of things offer brokerages that are like traditional brokerages, which will allow you to kind of get your start, So I think go from Robinhood to one of those brokerages, or some other brokerage that you enjoy, right? But let Robinhood be a launch pad, in my opinion, and move on.
I think that's a good idea.
Yeah.
Yeah. I just graduated college and I played soccer, and I invested in Tesla early last year. And so a lot of the kids on the team were like really interested in the whole investing side and were asking me questions. And I was like, what? Honestly, I just did research on one company and just put all my chips in. Like that's all I did.
Yeah.
I'm not an investing expert. Like I just saw kind of what was happening with Tesla and really believed in the company. And so I went with that. but like I had a friend reach out to me when all the GME stuff was going on, and he was like, have you seen what's going on with Robinhood? Like, are you selling all your stuff? And I'm like, I'm definitely not selling my Tesla, but I wasn't too worried about Robinhood, like, and their ability to stay a company. But I have been looking into like how, like, what is, like, are they like the best place for me to store and have my stuff and do investing through? Because I'm just not sure, honestly.
Yeah. They're certainly not, in my opinion. And they're, you know, even more so not, in my opinion, for cryptocurrencies.
I didn't know you could buy cryptocurrency through there.
Well, you know, you can buy IOUs for cryptocurrencies in there.
Right.
Here's the thing is, like, you know, you buy currently as it stands, you know, unless there was an update today, is, you know, you can't buy Bitcoin and then just move that Bitcoin out, you know, right? So are you buying Bitcoin, right? You must sell it in order to, like, remove the money and go to some other exchange that'll actually sell you physical Bitcoin, physical in quotes, of course. But, you know, Bitcoin that you can be a custodian of yourself.
So you're just essentially investing in the ability to make the gains on the Bitcoin as
that's exactly it.
Monetary value.
Or the losses.
Yeah.
Sure.
That's interesting. So like with other wallets, like I had a Gemini wallet. I moved all of my stuff to BlockFi to do the interest thing because they didn't have it on Gemini or whatever. But like with those, are you able to like take the actual Bitcoins and like take them and have them yourself? Or like you said, they're the custodians, but are you able to like remove them or no?
With BlockFi. Is that what you're saying?
Well, with
Gemini too.
Gemini or BlockFi.
Certainly, yeah. And Gemini now has a earn program as well. I probably just noticed that.
Yeah, it popped up right after like I put it into the other one, and I was like, all right, well, whatever.
All right, fine. Also, you said Bitcoins, and I'll never forgive you. I'm just kidding.
Damn it! After that long-winded discussion.
So no, I'm kidding. But yeah, you can certainly remove your Bitcoin from Gemini, Coinbase, Voyager, BlockFi, any of these, which is why Robinhood is just so ridiculous, you know, because you can't. And even when Square first launched their Bitcoin program, you couldn't remove it either. But then, you know, you can now, actually. And so, you know, I'm a huge Jack Dorsey fan. I love that Square has made that available for people. You know, their fees are ridiculous. So just know that they make a lot of money off fees when you're purchasing and selling Bitcoin on there. You just be blown away by how much you're paying. But then, like, you can talk about, you know, at least it's not PayPal. PayPal, just like Robinhood, doesn't allow you to send your Bitcoin out of your PayPal wallet. So yeah, they allow you to, you know, apparently hold Bitcoin in their wallet or in PayPal. What's interesting there is that they have all of these merchants around the world that you can spend your Bitcoin with, right? So talk about, you know, what can you buy with Bitcoin? Well, it's like literally anything with that Visa card option I was telling you about, or with your PayPal account, you know? So it's becoming easier and easier in that regard.
Yeah. And I mean, I just like, honestly, I think I listened to a Peter Schiff book about just markets, and like, because I was looking into all this, I was really interested in the 2008 crash, and I think that the government is really poor at doing a lot of what they do.
Totally.
So I was interested in listening to his stuff on that, and I don't believe that he's a proponent for cryptocurrencies at all.
You would be right.
Yeah, and I'm pretty sure he is. Like, even in his book, he was like, I don't advise this.
Right.
But I just was like, I mean, it makes sense. Like Bitcoin, cryptocurrencies kind of just make sense, making a universal thing that's like untouchable. There's no central power. And that was like the main thing that he was arguing in his book, was that the government was terrible at like taking care of money. So why wouldn't you just make it so that everybody like has to do it together?
Yeah.
I didn't understand why he didn't like.
I'm glad you're confused as well.
Yeah.
Peter Schiff is the most hardcore Bitcoiner that exists. He just doesn't realize it yet.
Right.
And it's so absurd. And it is hilarious to watch his own son, like dunk on him on Twitter, like talking about dad. Like,
oh my God.
You just said this about Bitcoin and Bitcoin just did this. Like, what are you talking about? Right. And it's super funny to watch. It's wild to see Peter Schiff tweet more about Bitcoin than he does about gold,
Right.
And it's just like everything that you appreciate gold for is built inside of Bitcoin.
Right.
And so like, let's go.
Except for it's way easier.
It's gold for the age of the internet.
Yeah.
And we chose gold. Like gold's been around, forever. And we've essentially known gold for 5,000 years, for maybe 2,500 years. We've used it as a store of value. And it's been the hardest money and the longest lasting money that we've ever known as human beings. And, societies that have crumbled were societies, I'd say great societies that eventually crumbled happened because they left a gold standard at some point. And as soon as that took place, society eventually unravels. We did that here in America in the 1970s under Nixon. And so there is an argument to say that we are unraveling.
We're approaching it.
Right.
There's multiple arguments
Totally.
for the unraveling.
And
of our
printing,
society.
33% of all the US dollars in the last year and a half.
I was just about to talk to you about that.
And
after this next one, it's going to be 40%.
It's insane. And so for you to say that, inflation doesn't occur after an action like that, is just flat out wrong.
Yeah.
And, it's certainly the way that societies can collapse. And so, you want to move into a deflationary asset. So it's like Bitcoin came around at a time where it was the most relevant, and we needed it the most. And it's really like a savior for monetary systems.
That makes you think about the creators of Bitcoin.
Mm-hmm. I like how you're sold as multiple people.
Yeah, I just don't know.
I love it because people take it in different ways.
Yeah.
I love it. It had to have been multiple people, I think. Yeah.
Yeah, no, that's what I'm thinking. It's so complex, but I guess because I was thinking they have such great foresight, but I guess if they just looked back in the past and thought about it as a gold asset, like you just described, but for the internet, they could foresee pretty much the same situation as gold. Like mining gold nowadays is like you can still make money on it, but it's like I feel like a lot of people are going to end up losing money if you go out trying to find gold.
Right.
And like the division of it and how it got turned into different parts, like you were talking about Satoshi's, like the gold bar was more expensive. You could trade it in for other things to whatever. But I guess like if you modeled the Bitcoin after gold, essentially, you would come up with what we have now for Bitcoin.
Totally.
Which is really interesting to like, maybe they understood that like leaving the gold standard creates that like lapse in like judgment for the people in charge of running the money. Because once you leave the gold standard, you think that you can just print as much money as you can.
Right. And you do?
Yeah. And so he was like, well, there's a problem here.
Yeah.
Or them. And they just were like, this'll fix it.
Yeah. Not only do you think you can print as much money as you can, you have to in order to keep it going. You have to keep printing money in order to keep it going. So inflation has to occur in that type of society.
Yeah, like 2% or something like that. It's been 2% for us on average for a while.
What's that average now? Yeah.
I know. Now it's like.
Yeah. And so, people always say, well, what backs Bitcoin? And the short answer to that is math. And, but my response is typically, well, what backs gold? And the best answer to that is 5,000 years is what backs gold,
right?
Which is a phenomenal answer, except for what, really is the answer. The correct answer is the stock to flow ratio of gold. That's actually what makes it valuable. The fact that we know that there is this hard asset that we pull from the earth, or in maybe some amount of years, meteors, is known currently at a certain rate. So we know exactly the stock to flow ratio of gold. We know that it's going to come on to or into society at a certain rate, right? Which allows us to know that and hold on to it and have confidence that it's going to appreciate, because it's never going to flow into society at such a fast pace that it causes an inflation of the asset. And so that's really what backs gold, is the stock to flow model, stock flow ratio.
So you want a low stock to flow.
That's correct.
Okay.
And known stock to flow is important.
So what happens, so what you're saying is we don't know the stock to flow for like the US dollar because they're just willy-nilly kind of.
Well, certainly. We have known it before and it changes.
Yeah.
And so that makes it, not a desirable asset to hold long term. Therefore, Bitcoin has a known stock to flow ratio that it's actually harder than gold's. It's lower than gold's.
And then it approaches zero.
Exactly. And then becomes infinitely lower,
right.
And so, we know that. And so it's a deflationary asset. And so it is a great long-term hold, in my opinion, right? It's, already proven itself in 12 short years that it's the most, valuable asset and quickest to catch on that we've ever seen. So it just doesn't compare to tulip mania and things like that. Those arguments are so tired and outdated. Really we should be talking about like quantum computing and encryption and that sort of thing over like tired arguments like tulip mania and things.
Right. So with quantum computing, you brought up quantum computing, and that just because the computing power of a quantum computer is far greater than what we have now. Is there a point at which a quantum computer could end up breaking like the Bitcoin
network?
The
answer is yes. But the reason why it is very unlikely to happen is that the same technology can be applied to the Bitcoin network, right? So Bitcoin can be a quantum chain.
Jesus.
Right. And so, there's already many cryptos that are like coming out as quantum resistant and all these things, or, post quantum chain, that sort of thing. And essentially they're just using more challenging encryption methods, which is something that the Bitcoin blockchain will be updated with, right? Because this is open software and there are a bunch of developers that contribute to Bitcoin's network. And as quantum computing comes to be more prevalent, as will the implications of utilizing quantum computing in cryptocurrencies, especially in Bitcoin, and in every other facet of your life that involves technology.
So so the source code is open for Bitcoin?
Yeah.
And it's still, I guess, because it's because of the blockchain.
You can make your own Bitcoin right now, right? It just
that's what all these other coins are, right?
No one's going to say, Devon made Bitcoin, so I'm going to adopt it,
Right.
And so
some people can do that, probably.
Certainly.
Like Elon could probably do that.
Sure. He could have an Elon coin, he already does. It's called Doge.
Right. Yeah.
I'm just kidding.
He's really backed that one. It's interesting.
He's really backed that. Doge has been around for a long time.
I know. Do you think he's just, I saw this speculated and I thought it was a really interesting idea. Do you think he's just testing his market, like abilities, like his ability to change markets?
Honestly, I think he's having fun. Like, that's all that guy does is just not take himself too seriously. Mm-hmm. And Doge is an old school favorite, from a lot of crypto heads. And, I've certainly owned Doge for years.
Really?
And it's always been funny. Yeah. And, sometimes we'll joke about Doge, like when the, big block sort of, well, this is a whole nother thing, but essentially, the reason we have like Bitcoin Cash and Bitcoin SV and all of these other things, or just from disagreements in the community about what Bitcoin is supposed to be. But of course, Bitcoin moves on.
So they would just make their own.
Yeah. Well, they fork the chain and then they're like, this is the real Bitcoin. And of course it is not. And then it eventually fails. And as we have seen now that they were both Bitcoin Cash and Bitcoin SV in the top 10 by market cap for some time, they're both on the way. Well, only Bitcoin Cash, I think today was number 10. And it's funny that like things change so rapidly in this space. By the time someone's listening, maybe it's not even in the top 10 anymore, which is a good thing for Bitcoin, which is also why a large exchange called OKCoin just announced like this week, that they were removing Bitcoin Cash and Bitcoin SV from their exchange, as a service to Bitcoiners. Right. And as a service to newcomers and the community at large and to the world.
Right.
Because, these chains are false. They are, to say that they are false is a little harsh because they do work in their own right. Right. But they're not Bitcoin. And that's the distinction that needs to be made.
Well, that breaks the whole idea of the blockchain, doesn't it? Because you're supposed to validate one and the other one's disvalidated or unvalidated, right?
No, they are their own chain and they have miners that contribute to those networks. And some people and some miners even believe that that's the correct way to go about it. But the disagreement is with the overall market. And you can see that in the market cap, the difference between Bitcoin and Bitcoin Cash or Bitcoin and Bitcoin SV.
Right.
These are really different, market cap sizes. They're really different communities. And, there is only one Bitcoin and that is BTC.
Yeah.
Or XBT. And not to be too confusing, BTC and XBT are the same thing. They're called two different things, according to whatever exchange wants to list them as. And that's because the letter X in front of a ticker, signifies a currency. And so X just means Bitcoin. And you can see even an American exchange like Kraken would call it XBT, but most call BTC. Same thing.
Yeah. Okay. So if you create your own coin, mm-hmm. Does that have to be mined as well? So are all coins able to be mined? Right.
So no. So, when you say mined, that typically means that you're talking about a proof of work chain, which is a consensus mechanism developed, with Bitcoin. It was actually around before Bitcoin proof of work was, and Satoshi Nakamoto used proof of work to make Bitcoin a reality, along with some other components. And since then, there is another mechanism called proof of stake. There's actually numerous mechanisms, dozens and dozens, I'm sure. But the most two common proof of stake are the most two common consensus mechanisms are proof of work and proof of stake. So you can mine, and I put quotes around that because by utilizing proof of stake, which is to say that you have staked some coins or equity in the chain, right? By holding the coins and staking them into a specific wallet and using that wallet to make decisions or back up the network. You are staking those coins, and typically, on most chains that use that mechanism, you're actually paid out an incentive for doing so. So it's like proof of work, except for you don't have to expend the same amount of energy.
Oh, interesting. Mm-hmm. Yeah, it's still like, it's like the more I learn about it, the more confused.
Yes.
The more, because it's just like,
I know we could have gone many ways, I'm sure, in the conversation, and I'll just dive down certain paths and pull my head up, for air every once in a while and not realize, that maybe we went too far too fast or something. But yeah, you're right. There's a whole lot of information. It can easily make your head spin. The best way to do it is just take it one little nibble at a time and start with someone really easy that speaks to you. And I would fully recommend someone like Andreas Antonopoulos, which hopefully you can put in the show notes.
Okay. Yeah, definitely. That was, yeah. I mean, there's still obviously so much more that we could talk about.
Yeah.
But it's been a long time. How long have we been going? Hour and 30 minutes now. But right before we go, I would like to ask you what you think. City of Miami just adopted like Bitcoin into, you can get paid out in Bitcoin if you'd like. You can pay your taxes in Bitcoin, I guess. Is what I've seen. How long do you think it is before more cities and then the country starts adopting something like that?
Yeah, Francis Suarez is the mayor of the city of Miami, and I would just love to give him like the most fierce flying high five, because he's been such a proponent for Bitcoin and is like, he totally gets it, and I absolutely love it. And one of, his goals with Miami is to create or further, its stance as a tech hub, right? Miami. And so, by one of the ways he's done that is by really, making it interesting to be there as a fintech company. And another way he's done that is just to be a hardcore Bitcoiner, which I love, and, I hope, many other mayors and, other government officials around the country and the globe for that matter, follow his lead and, pay attention to that and help, build up their, city by moving some reserves into Bitcoin, as a, fight against deflation, right? So if you want to keep yourself, more safe, what Mayor Suarez and what many others would suggest is to, move some of your reserves into Bitcoin, whether you're a person or a business. And that's just because this is, kind of a safe haven asset and has been for a while if you have a long-term horizon.
We've actually seen that with Tesla.
Totally.
I mean, they I don't know how much they bought, or they did 1.5 billion into Bitcoin.
Correct.
And that was at 33,000 a coin. And now
roughly, yeah,
they've made $1 billion. Or that has gone up. The value of their Bitcoin investment is roughly $1 billion more than it was when they bought it, right?
Yeah. And MicroStrategy, arguably is really the company. Michael Saylor and MicroStrategy is really the wave that the whole industry needed, right, to talk other CEOs and organizations into putting some of their reserves into Bitcoin. They've made an incredible amount of purchases in Bitcoin, much more than Tesla actually.
Oh, yeah.
And it's absolutely fascinating. I think that, if you talk to someone like Michael Saylor from MicroStrategy, you'll discover that it's not about how much you make on Bitcoin to someone like that and to a Bitcoiner, right? Because I think I'm excited that you brought this up, because there's a fundamental misunderstanding that I think almost everyone has about Bitcoin. And that is, Bitcoin isn't an investment.
Right.
And has never meant to be an investment.
Okay.
Bitcoin is a new financial infrastructure for the age of the internet. And it is a distributed system that allows all of its participants to utilize it without a third party or without government or Federal Reserve control, right? Allowing for the separation of money and state, just like the separation of church and state. Therefore, allowing for a better society. That's the reason Bitcoin exists. It's the hardest asset we've ever known. It's hard money. It's real money, right? What is Bitcoin backed by? It is real money. What is fiat backed by? Not gold. Yeah. What is gold backed by? We understand that already from earlier in the conversation. So Bitcoin is real money, just like gold is real money. Those are the two real monies that we know on earth. And so it isn't about how much money, and put that in quotes, that you make on your Bitcoin investment.
Right.
You should really only be paying attention to the amount of Bitcoin you have, right? It doesn't matter what the value is. When you say this company bought $1.5 billion in Bitcoin, it's like the life of that statement is so short, because next week that's going to be different, right? And in the short term, whether that's up or down doesn't really matter, because in the long term, it's up.
Right. Okay. Yeah, so I was actually going to ask you, I was like, do you see this as like a hold asset for something to like an investment, or as like the actual payment method for the future?
That's the whole rolling out concept that I need that analogy for, which is really that right now it's a hold asset. Later in life, later in Bitcoin's existence, it's a currency.
Once it's broken down to the Satoshis.
Right now, it's a store of value. It will be a unit of exchange. It is already a unit of exchange. It just doesn't have the flexibility or the speed in some ways that we need today. Unless you are using a layer 2 solution, which certainly already exists and will continue to become better and better.
That's cool. That's awesome. I mean, my brain is all over the place. And just, I love like engineering and design and all that sort of stuff. I built all of this, and I love that on like digital as well. It's very interesting to me. So just my brain is just so perplexed by how detailed the whole blockchain Bitcoin thing is, because I just can't get past the idea of it being like completely untouchable to like a person. Like you'd have to have the whole group agree, which at this point is impossible,
right?
Essentially. And until we get quantum computing, and obviously you were talking about how we could move it into
quantum chains,
it just makes it even more complex. And it's just like, it's like beautiful almost.
It is beautiful.
How like,
I would describe it the same way.
Yeah. How intense. And I'm sure there's millions of people that would love to know who created it, and like the actual group or person, because it's such a crazy thing.
Yeah, we're better off not knowing for sure. But
why do you think so?
If you have someone to pin down, interview, prosecute, figure out, exploit, then you have a weak point in a network. And in this case, this isn't just a weak point. It's a very significant point of a network, right? However, again, even if we discovered who Satoshi Nakamoto is or are, it's not like the network would go away or stop functioning properly.
Right.
But I believe that Hal Finney was part of Satoshi Nakamoto, and he's no longer with us. I think that the access to the Satoshi's wallet is going to remain inaccessible forever.
Interesting. That's awesome. I'm super excited that we got to have this conversation, because I learned so much, and I'd just like to thank you for coming out and sitting down with me. I'd love to do it again in the future, maybe.
Totally.
Go even more in depth.
We could talk about soccer next time.
Yeah, definitely. All righty. Thank you.
You're so welcome. Cheers.
Yeah.